Welcome back. We're not done with the roller coaster in the stock market a day after Trump issued a 90-day pause on most tariffs, reducing them to 10% for most countries. However, tariffs on Chinese imports were increased to 125%. Let's see how the markets are moving this afternoon, 2 p.m. Eastern, on Thursday, April 10th. As you can see, most of the indices are red. Most of the tech sector is down. Microsoft is down 3.9%. Nvidia is down 6.5%. Financial services are down. Consumer cyclical assets are down. Internet and retail, Amazon, Tesla, they're both down. Communications are down. We're looking at Google, Facebook, or Meta, also down 6.75%. Healthcare, we're looking at Eli Lilly down 4.85%. The only green side to this is United Healthcare stock is actually up 3.3%. Let's take a look at the market news and what's shaking up Wall Street. We can see that stocks slide as economic angst hits Wall Street. And also live updates from CNBC News is that the Dow drops 1,300 points. S&P 500 falls nearly 4% as market pares back gains from historic rally, which was yesterday, where we had the single largest trading day of 2,900 points on the Dow Jones. And you can see the news is that stocks fell on Thursday, giving back much of the gains from the historic rally seen the previous session after President Donald Trump announced a 90-day pause or reprieve on some of its reciprocal tariffs. Investors are worried that even with the short pause on some of the duties, economic activity will be slowed by Trump's signaling out of China with a much higher rate, and this is the 125% tariff rate on China. We can see that the S&P 500 sold 3.9%. It's down to 52.90 from yesterday's high. The Nasdaq Composite slid 5%. It's down to 16,486 compared to yesterday when it jumped about 12.2%. And the Dow Jones Industrial Average, the Dow dropped 1,279 points or 3.1%. It's down to 39,709 compared to yesterday's high of 40,608. In terms of US consumer inflation, eases ahead of tariffs. This is actually as of April 10th, about half an hour ago, is that the consumer price index dips 0.1% in March. CPI increases 2.4% on year-on-year basis, and the labor market is stable in early April. Now in Washington, we can see the US consumer prices unexpectedly fell in March amid cheaper gasoline and used motor vehicles. So inflation is actually easing off, but the benign inflation reading is unlikely to be sustained after President Donald Trump doubled down on tariffs on imported Chinese goods. The first monthly decline in prices in nearly 5 years. This is impressive, by the way. So inflation is cooling off. Reported by the Labor Department on Thursday also suggested softening demand amid heightened recession fears due to tariffs, and led financial markets to anticipate the Federal Reserve could cut interest rates by 100 basis points this year. That's significant. We can also see that airline tickets cost less today, as hotel rooms and motels. There have been reports of Canadians boycotting travel to the US, and Trump has also as often news about annexing Canada. So that actually takes into effect, which means that the airlines are lowering ticket prices just to bring in more tourists into the country. And also we see that the consumer price index, CPI index for data for March was largely dismissed as dated because it likely captured only a fraction of the first wave of Trump's barrage of import duties, including a 20% tariff on Chinese goods and levies on steel and aluminum. Other news we get is that retail, autos, and tech, these are the US industries that could be swallowed or walloped by tariffs on China. Remember, Trump still keeps the 125% tariffs on China, and in reverse, China has retaliated against the tariffs, imposing 84% tariffs on US imported goods into China. We can see the news from Fox Business is that China dominates tech supply chain and rare earth minerals market needed for such products. Remember, China is the world's world's largest producer of rare earth minerals, producing about 70% of that. Um, so what do you think? A $30,000 iPhone? That's the estimated price tag for your smartphone if Apple make the device entirely in the US. So you'll pay as much as a car for an iPhone, 30 grand, right? According to analysis that has resurfaced as President Trump ignites a trade war with friends and enemies alike. That eye-popping estimate originated in 2018 with investor Glenn Luck, who argued the US lacked both the skilled labor and raw materials needed to mass produce advanced tech like the iPhone. While $30,000 may sound outrageous, it underscores how the tech and electronics sector, heavily reliant on Chinese labor and materials, is bearing the brunt of the US China trade war. So this is one of the reasons why to move manufacturing, it has to be a long-term plan, right? So it's not something which happens overnight or within a year. You're talking billions of dollars. You're talking high skilled labor to be trained and the access to the raw materials. In this case, the iPhones, all these smartphone devices, tablets, laptops, they use rare earth minerals, and China produces about 70% of these minerals. So you can see here that China is a critical link in the global electronics supply chain, producing everything from semiconductor chips to circuit boards. It also processes 90% of the world's rare earth minerals. I was actually wrong. It's not even 70%. It's 90% of the world's rare earth minerals come from China. So it actually processes these, and they're essential for smartphones, laptops, and advanced military systems. So of course, as with that news, you can see the a lot of the stocks are trending downward. Apple is down, Dell is down, Intel Corp is down, Qualcomm is down, Cisco, Nvidia Corp. Let's go to the tech sector here. We can see Microsoft is down 4%, Oracle is down 4.99%, Palantir is down 4.62%, CrowdStrike is down 3.1%, and all the tech heavy software or infrastructure assets are down. Consumer electronics, Apple has been taking a major shellacking because of the trade wars with China. So that's a real live look of how the stock market is doing. This is the live ticker on the Dow Jones. We can see it's about 800 points. Looks like it's reversing course. It's down to 799, 800. So it's a bit of a roller coaster ride, which means the Dow Jones is about 2% down right now. So a quick look at the live stock market to see what's really happening with the stocks. And we'll keep an eye on this over the next couple of hours and see how the market reacts as the Chinese markets open up later today. We'll see how those price in the current administration's 125% tariffs on China or Chinese imports. So that's a quick look at the markets here at Data Finance 365.